Hello and welcome to myfinancesteacher.org. Today I want to talk about gold again, as we are looking forward for this lower low in gold, and we are looking forward for that handle to grab the cup by the handle. Well, first of all, on the lower low, on this futures chart of gold, we have a marginally lower low on the 4th of April. At the beginning of March, the low was just slightly above 1280, and on 4th of April, the low was just slightly below 1280. Does it qualify for the lower low that we've been expecting? Well, we've actually been looking forward for a more significant decline, probably a decline where gold retests its 200-day moving average around 1260. But the main topic of this video is that while patience is a virtue, we also should start looking forward to gradually probably build up our positions in gold, GLD, GDX that you want to hold when the gold actually starts moving upwards. So let's talk about the reasons why I think there is a chance that gold will not really retest its 200-day moving average, and it might be soon time to start building up our positions. So first of all, we've seen this lower low compared to we saw in the beginning of March. A lower low which was not confirmed by RSI. So we have some sort of a positive divergence from RSI because it did not show us a lower low compared to where RSI was at the beginning of March. Another interesting thing here is this MACD is just about to give us a positive crossover. Over here, we see a positive crossover maybe happening over the next several days. Although we've seen this crossover in the past, that was somewhere around the middle of March, and usually MACD is a little bit late as an indicator of the actual lows. At that positive crossover, which was some sort of a fake out, we did not expect gold to shoot upwards from there in the middle of March. We see that the low was actually in the beginning of March, where the positive crossover in MACD was somewhere in the middle of March. So sometimes it can be a little bit late, but in the grand scheme of things, when the upward momentum for this whole intermediate cycle in gold starts several days late, is not going to be that important. So far, the positive indicators for gold is positive divergence on RSI, possibly a bullish crossover on the daily MACD. What else do we see on the gold price? It's quite far from the 200-day moving average. It never retested the 200-day moving average over the last couple of months, but it's just bounced up from its 100-day moving average. And the bounce is pretty nice. There's actually a gap on gold price on the daily chart. Another thing I can see on the gold chart is this descending triangle, which often can be a bearish sign. So there is still a chance that the formation of this handle for the cup is going to actually give us a retest of the 200-day moving average. On the other hand, this handle has been going on for more than a month. That's a month and a half. So that duration might soon be enough for a full-fledged handle. So there are already several positive indicators on gold price. Although we haven't really seen a significant lower low, which usually happens during a declining phase of an intermediate cycle, there was kind of a marginal lower low. As a result, I'm now not extremely certain that we are going to go much lower in gold. So what I would suggest here is probably it might be wise nowadays to allocate a small portion of your investable cash into gold, GDX, or whatever you want to own, just a very tiny proportion of that. And in case if gold goes down, you'll still be fine. You'll add to your positions, reducing your average price significantly. And on the other hand, if it turns out that the handle has already been formed and we're going to start moving upwards in gold price, you will not be completely left at the train station. You'll have your one leg at the train. You'll just have to grab onto it a little bit tighter, right? So to be honest, I've actually thrown my shoe at the train onto the train. At least my shoe is there on the 4th of April. I'll talk about that in a minute. For now, though, since I'm a little bit uncertain with this forecast for gold price, let's have a look at some more charts. Maybe we'll see something interesting there. This, for example, is the dollar index. What do we see on the dollar index? The current daily cycle in dollar has only been going on for 19 days. So even though today dollar is down quite significantly, it might still have a chance to retest the recent highs at about 97.6, since there is some time left within this daily cycle. Talking about the intermediate cycle in the US dollar, what do we see here? It's so far only been going on for about 3 months. So again, although it might start its declining phase sometime soon, on the other hand, it hasn't been going on for that long yet. And it might also keep rising for a short while. Looking at these same things for gold, as we mentioned, the daily cycle is already stretched. The handle itself has been going on for a month and a half. The daily cycle has been going on for a couple of months. Usually they actually last for a couple of months. So we might be already within this time frame for some sort of a low. And the intermediate cycle has already been going on for quite a long while. That's like, it's already been going on for about 7 months or more, I think. It's another sort of unusually long intermediate cycles. They kind of get stretched recently, I think, which also just indicates that we might be within the time frame for the intermediate cycle to finish and a new advancing phase to start relatively soon. On the other hand, though, that 200-day moving average looks so attractive, doesn't it? This is GDX now in front of us. So what I've done personally just a few days ago on the 4th of April is I got a little bit more of GDX. Unfortunately, at near the top of that daily candle at about 22.5. I still have most of the money that I want to invest into gold-related assets in cash. So if we do see significantly lower lows, I can take advantage of that. But on the other hand, I already have a leg on the train. By the way, while we're having a look at GDX, we might as well just draw some lines here. And what do we see? Well, maybe some sort of a triangle, symmetrical triangle, pennant formation, and a similar thing on RSI itself. So tighter and tighter price ranges on GDX, possibly lower volatility over the next several days, and then explosion. The question is, where will that explosion go? Well, what I see is a couple of possibilities. One possibility is we see some tightening within this triangle on GDX or a similar triangle on gold, and then an explosion down. Finally, a lower low, retest of 200-day moving average, followed by an advancing phase of a new intermediate cycle. Alternatively, again, some volatility locally and an explosion upwards. In either case, at the moment, I'm close to 50-50 on either of those two possibilities. So let me know, guys, what do you think? Are we going to explode upwards soon? Or are we going to dip first and then go up? Let me know what you think in the comments below. We all want to know what the market thinks, and we're all part of the market, aren't we? So I'm quite interested in your opinion about that. But before you start commenting, remember to give the thumbs up to this video, give us a like, and I will continue to do my best to provide hopefully good value for you guys with these videos. And of course, if you unsubscribe to the channel, subscribe to the channel. Hit that bell notification, hit that bell button, get the notifications for all the videos, and be in the know. And finally, Good luck with your trades.